Nidhi has already attended this chapter when we were doing doubling. Okay, so it mustn't be a problem for her, even if we
Okay.
start. Okay,
Okay.
so the next chapter is procedures. So, procedures is the thing that we do in order to ensure that whatever the client has given us is true and fair. Okay,
Mm-hmm.
so we do
Okay.
procedures upon the balances in the SOFP. We do procedures on the figures of SOPL. We do procedures upon the estimates that the client has calculated upon certain figures. We also do procedures for not-for-profit organization as well. Okay. And
Okay.
it is very important that we give clear-cut instructions on what to do in your exam paper, and the language should be clearer. What you're doing should be clear. Okay.
Mm-hmm.
Otherwise, for procedures, you could lose marks easily. Okay, just a moment.
Okay.
The problem in the recordings, I've clearly mentioned how ACCA wants you to write procedures for the exam. Okay, everything is
Okay.
laid out clearly. I've given a format. So follow the format which is there in the recording. Don't
Okay.
don't consider referring to any other thing, because procedures I'm directly making you guys learn from the ACCA source itself. Okay, we are
Okay.
really depending upon the ACCA technical articles in order to write procedures. I have not taken any other source. Okay,
Okay.
whatever has been taught in the recording, follow that only. Okay, now
Okay.
the first topic is directional testing. Okay, so directional testing is simply that we are going to test the double entry system. Okay, so that means we have to keep in mind for any debit or any credit, there is a corresponding debit or credit to it, right? Okay,
Mm-hmm.
so if there is a misstatement in the debit entry, then that means the credit entry is also gone wrong, right? So
Yes.
auditor is going to take a preliminary test over all the overstatement and understatement of debit and credit. Clear?
Clear.
And this could lead to indirectly discovering other problems as well. Okay, so if the problem has is with the trade payables for understatement, okay, then we are going to check for the related expenses and the cost of sales also. Okay, because probably these two would also have been recorded less than what it was actual. Clear?
Clear.
So when we test an understatement, okay, we have to decide how the understatement has actually occurred, right? So it could be
Mm-hmm.
due to incomplete balances. That means when the client was recording the transaction, they have recorded less, okay, or
Mm-hmm.
the error. Some items from the invoices could be missing, so the client recorded it less. It could be like that, okay. So
Okay.
testing for understatement is actually completing the assertion of checking whether it has completeness, accuracy, and valuation. Okay, you have covered the seventh chapter, the
Mm-hmm.
assertions.
Almost.
Okay. So in assertions, in the evidence chapter, there is something called assertions. Okay. Make sure
Yeah.
you're very thorough with that. Okay. Because assertions are very important for us to complete the procedures. Clear? You
Okay.
should
Clear.
be able to answer them even in your sleep. That is more important. Assertions are very,
Okay.
very important for procedures. Clear? So
Okay.
what do
Clear.
auditor do? An auditor is going to select samples, okay, outside of the accounting system, and he is going to trace these transactions in order to ensure that it has been completely recorded. Clear?
Mm-hmm.
Okay. So we go like this. We take the source transaction, we trace it to the ledger or the records. We then trace it to the financial statements. Clear?
Clear.
So when it is an overstatement, it could be like there are some invoices which shouldn't be there and you have recorded it, or you have recorded it in a higher value, it in a higher value than it was there. Okay. Maybe a
Mm-hmm.
transaction of 2000 was recorded as 5000. Clear?
Mm-hmm.
Okay,
Clear.
so overstatement is actually when overstatement, we are going to test the existence, whether this particular amount is there, okay, or we have the right or obligation to complete that, to make that due, okay, whether it
Mm-hmm.
has actually occurred, okay, whether the amount is accurate and the valuation is correct. Clear?
Clear.
So here also auditor is going to select some samples, okay? And then
Mm-hmm.
these samples would be traced back to the supporting documents. Okay, clear?
Okay.
So here we
Clear.
start from the financial statement, we take to the ledger and then to the source of the transaction. Clear?
Mm-hmm.
Okay. And in the coming recordings, I have done many problems. Okay. And for each of the problem, we are going to refer all these things in order to get an idea how a procedure should be written. Clear?
Okay. Clear.
For the sake of theory, it is a small chapter. For the sake of doing problems, it is a big chapter. Clear?
Okay. Clear.
We'll move on with the next chapter, 11th one, completion and review. Okay.
Mm-hmm.
So when we have done the audit, then comes a final review, right? Okay.
Mm-hmm.
So when the reviewer is reviewing a certain financials, they're going to ask whether the work has been performed according to a professional standard and whether all the regulatory and legal requirements have been met. That is first thing, right? You ask for the
Mm-hmm.
trade license, right? You
Mm-hmm.
ask whether every vouching was done properly, right? Your seniors ask
Mm-hmm.
that. Second
Yeah.
one, we're going to discuss whether there was any issue that has come to notice while the audit was being performed. Okay. Then
Mm-hmm.
the senior is going to ensure that for those issues, there has been consultations taking place on a regular basis. Okay. And he's also going to ensure that these has been documented and whatever the consultation advices were and they were actually implemented. Clear?
Clear.
Okay. And then they are going to question whether there should be something revised, okay, or whether the timing of the audit should be extended, okay. So, and
Mm-hmm.
also the extent of the work should be modified. Everything would be taken into consideration. Clear? And
Clear.
also, the reviewer is going to ensure that whatever work that the auditor has done, is it enough to support the conclusion that has been drawn? Clear?
Clear.
And also, he's going to ensure that everything is documented properly. Okay. Then he's going
Mm-hmm.
to ensure that for the conclusion or the auditor's report has sufficient appropriate audit evidence in order to back it up. Clear? Okay.
Clear.
And lastly, he's going to ensure that the whatever objectives of the engagement was, it has been achieved or not. Clear? And this would be like
Clear.
a check, and this would be like his main checklist, right? So he's
Mm-hmm.
going to ensure that all of these things are correctly done. Clear?
Clear.
Okay. So
Mm.
in addition to these review, there is a hot review and cold review, which we have actually covered in elements of engagement, right?
Mm-hmm.
Okay.
Okay.
Summary, we are on the 11th chapter, completion and review.
Okay, ma'am.
There would be recording, so you can go back and watch the recordings. Okay.
Okay, ma'am.
And also, I'm planning to take a half an hour class in order to finish off the AA portions. Okay.
Okay.
So maybe tomorrow, day after tomorrow, and the next day also, we might have a
Mm.
half an hour class each day and finish off with the portion. So probably 8:30 here. Would you be able to sit?
8:30 morning or ma'am evening?
Nine. Evaluation of misstatements. So we have to identify all the errors, and all the errors should be recorded on a working paper. Clear? Okay. And there would be performance materiality also set, where individually there could be immaterial errors, but when aggregated or in total, it could be a material difference. Clear?
Clear.
And we should actually request the management to adjust all the identified misstatements. We're going to tell them to pass journal entries to rectify the errors. Clear? And if there is any uncorrected errors, we are going to communicate it with those charged with the governance. Okay. And we are going to describe them what are the implications of those errors in the report if left uncorrected. Clear? And
Clear.
even after communicating that, if there is any material misstatements, then the auditor is going to modify their report. Clear?
Clear.
Okay, so uncorrected misstatements. So if the client is not ready to correct the misstatements, there are certain things. Okay, first one, materiality review. We're going to evaluate whether what is the importance of that particular error in the FS, first thing. And it's going to be based on our materiality. Second one, we are going to assess the criteria. Okay, whether is it material by size, by nature, etc. Clear? And
Mm-hmm.
then we are going to determine the impact of that particular error on the transactions on other connected areas. Clear? If, for example, if the trade payables is going wrong, the expenses, the COS, everything goes wrong, right? So we have to consider that as well. Fourth one, non-material transactions handling. Okay. So if the misstatement is not material individually or in aggregate, the auditor is just going to give a notification to the management that in the management report, just going to disclose that there is a certain error here. Clear? Now,
Yeah.
if the management has been adamant on not correcting things, we're going to provide a written representation to management. Okay, affirming means we are going to enter, we are going to admit that this balance is not material, both individually or in aggregate. So we are notifying you of that particular mistake. Clear? And then it's upon the management whether or not to correct that. Clear?
Clear.
Okay. Subsequent events. So see, the problem with the financials is that it is based on a financial period, right? A 12 months period, accounting period. Okay. Let's say for the namesake, it is from 1st January to 31st December. Clear? Okay. But it doesn't get issued right away when the year end is there, right? So that is the biggest misconception as a student, right? That the financials are prepared simultaneously as the year ends, right? It doesn't happen like that. So when the year is ending, every recordings and the accounts are maintained like that. Okay. And it's on a certain date that the financials actually gets issued or signed by the management and is given for issue. Clear? Understood?
Mm-hmm.
So there is a time gap between the financials being ready and the financials being signed, right? Okay.
Yes.
So in between, if anything happens, that is called subsequent events. Clear?
Mm-hmm.
Okay. So subsequent events are events occurring and facts discovered between the period and the date of the financial statements are being authorized for issue. Clear?
Clear.
So there should be a subsequent events review from our part as an auditor. Okay. So what do? We are going to do post year end management accounts audit. Okay. We're going to review the budget, the cash flow forecast, etc. Okay. And secondly, we are going to review the year end board minutes. Clear? Uh,
Mm-hmm.
and see, when we are auditing a client, when they have an AGM, they're going to call us in order to sit in the meeting, right? So that is a normal thing that happens. Okay. Now the third,
Mm-hmm.
we are going to review subsequent events. Okay. And if anything has been found, we are going to assess, discuss it with the management and assess its effects upon the financials. Clear? Fourth one, we are going to obtain a representation letter from the management confirming these subsequent events. Clear? Okay.
Mm-hmm.
And it is very important that we check the year and cash received. Okay. In order to ensure that whatever receivables that they have, this is called a subsequent testing of receivables. So it is just to ensure that whatever receivables they say they have has been actually received. Okay. And also, we are also going to test the NRV of the inventory in order to ensure that the inventory has been correctly valued. Clear?
Clear.
Okay. And in IFRS, we have already studied the existing events and non-existing events. Remember, in IAS 10, right?
Mm-hmm.
So what is an existing event? If something has happened after the year end and it is going to affect the balances in the financial statements, then it is an existing event. Okay. Now, if something has happened, but it doesn't give a major change to the record to the amounts that has been recorded in the financial statement, then that is a non-existing event. Clear? So adjusting event should be adjusted. For example, a bad debt that has been realized after the year end, then it should be reversed back. Clear?
Clear.
Okay.
Mm-hmm.
And inventory held at the year end and it has been sold for less than the cost, then the inventory should be revalued. Clear? Okay.
Clear.
And if any provision has been revised at the nick of the time, that is after the year end, then the provision should also be revised. Clear? Okay.
Clear.
These three are the most common things that the companies do. Okay. Now, if the adjustment is not affecting the financials, it is unadjusted, and we are going to give a disclosure regarding that. For example, the inventory loss due to a fire. Okay. So technically we have recorded the correct thing, right? So until the year end, it was there in the inventory. Okay. And suddenly fire happened and it all went away, right? So you're going to disclose it. Clear?
Clear.
Understood? Now,
Mm-hmm.
auditors responsibility for their audit work from year end to issuing of the FS. Okay. So there is two duties that the auditor performs. One is active duty and the second one is passive duty. Clear? So active duty happens when the year end has happened and between the signing of the FS. This is called active duty. Okay. So during this period, that is, during this period, we're going to do everything in our hands to ensure that whatever audit report we are giving, it is true and fair. Clear? Or it is
Mm-hmm.
supporting the evidences that we have collected. Clear? Okay. And
Clear.
at this time also, we are going to do subsequent event testing in order to ensure that all the things, all the material things are covered, appropriately covered. Clear?
Clear.
Okay. Now, from the auditor's report signed and the financial statement has been issued, it is the passive duty. Now, here the problem is the auditor is not actively doing audits, right? They have given their verdict and they have reclined or they have backed towards whatever they are, back towards other claims, right? So
Mm-hmm.
from you, they have done everything on their part and they have left, right? But if something happens, you should be, that is, as a client, the client should be notifying the auditor that this particular thing has occurred. Clear?
Clear.
Understood? So at this
Yes.
point of time, the auditor has no obligation to see whether any subsequent events has happened. Clear? So everything is on the
Mm-hmm.
client itself. Understood?
Understood.
Okay. Samriddhi went and came back.
No, she's back, but I think
Network
it's
issue.
due to Wi-Fi network. Yeah,
You can hear me
network issue.
correctly, right?
Yeah, I can hear you.
Okay. Now
Hello.
procedures.
Yes, ma'am. Now I can hear you.
Okay.
It is network issue.
Okay. 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 So up until the report is signed, the auditor should be very alert and should look into subsequent events. Okay. After the auditor's report, it is the client's responsibility to notify the auditors. Understood? Okay. Now,
Understood.
what
Mm-hmm.
are the procedures that we do for subsequent events? We are going to do inquiry and discussion. Okay. We are going to review all the board minutes. Okay. These are the subsequent event procedures. All right. We are going to
Mm-hmm.
get the written representation from the management. Okay. We are going to review budget, management account, and other financial data that is available with the client. And we are going to do all the normal procedures that we usually do. For example, cash receipts, payments, cutoff, etc. Clear? Cutoff, it
Clear.
is clearly explained in the procedures question practice session. So once Sarah starts listening to watching those, you will get to know. Clear?
Okay, it's the cash cutoff.
Yeah. Everything.
Okay.
Not just it's cutoff is related with sales, purchases. There are many.
Mm-hmm. Okay.
Okay. Now, going concern. Okay. So, going concern is a concept where we're assuming once a business starts, it's going to be forever, right?
Mm-hmm.
So if there is any problem or confusion in the business being continued, okay, then there is a going concern issue. Clear?
Clear.
Okay. Now, if your client is having going concern issues, then it is very important to represent your client's FS in a going concern concept in the liquidation format. Clear?
Mm-hmm.
Okay. So, as an auditor, you are to consider whether the management has correctly taken the going concern concept. It might be that your client company is not doing very well. There is going concern issue, but still the client company has been telling you the company is fine. Then it could go wrong. Clear? Because after all the testing and the stuff, you have seen that the cash flow is very low. There is no liquidity, right? So from
Mm-hmm.
your part, it is a going concern, but your client must have recorded it otherwise. Clear?
Clear.
Okay, and you are to ensure that there are adequate disclosures being given to going concern if there is any. Okay, so what are the typical indicators of going concern? If the net asset is a net current liabilities, okay, there is no borrowing facility available to the client. Okay, there is a very bad cash flow and liquidity problem. Okay, there is the company has been incurring loss repeatedly. Okay, the company is not able to pay debts, even the tax payments. Clear? The company's key management personnel has been resigning. Okay, has resigned, or any key staff has resigned. Okay, and the company has lost its all suppliers and customers who are major to them. Clear? So in this case, they could be going concern problems. Clear? So
Mm-hmm.
what are the typical audit procedures that you do? You're going to review the cash flow forecast, okay? And you're going to see the management accounts post here, okay? And you're going to analyze the trend in the performance. That means if the over the years, what is the stand with the company? Clear? Also, you're going to take the correspondence with all the major customers in order to ensure there is no disputes among the customers. Clear? And you're going to
Clear.
inspect correspondence with the bank also. Okay, correspondence is simply right a word given to all forms of communication. So in procedure, it is very important that you use this word correspondence. Clear?
Okay. Clear.
Okay. Now you're going to
Mm-hmm.
inspect the correspondence from the lawyers, okay, and all the related legal cases also, which is going to impact the going concern. Clear? Next is you're going to inspect the board minutes, okay, and also in order to ensure that the management has correct actions in place in order to attend to the going concern issues, okay. And lastly, you're going to obtain written representation from the management on their assumption of the company being a going concern. Clear? Okay.
Mm-hmm.
Now, the last standard is written representations. Okay. So, what is a written representation? It is an evidence, last sort. It's like a last resort. Okay. So, written representation is basically telling the management to admit that whatever in the course of audit has occurred, they are actually saying that all happened, and their client, their company is doing this, doing that, and they're going to give it signed. Clear? So, that is basically written representations. Clear? And
Clear.
without this, you can't get an audit report signed. Clear?
Mm-hmm.
Okay. So
Okay.
representations from management is a major source of audit evidence. It is actually telling the management to admit whatever they have given to the auditor. Clear? Okay. So
Clear.
standard
Mm-hmm.
requires the auditor to obtain the written representation from management on all the material matters in the FS. Okay. And this is going to ensure that sufficient appropriate audit evidence has been for example, if there is something related with the receivable balance and you're not satisfied with the procedures that you have done, okay, but the client is also adamant on keeping it, then you're going to get a written representation from the management regarding this particular thing. Clear? Okay.
Clear.
So, written representation individually is not a very good audit evidence. Okay. Always and always, the audit evidence is good when the auditor has obtained it from an external source or from what he has actually been investigating and examining or inspecting. Clear? So these are all
Yeah.
last resort. If anything, if nothing could be done, you're going to get the written representation. Clear?
Mm-hmm.
Okay. And as part of the completion process to issue the audit report, also you need the management written representation. Clear? Okay.
Clear.
So what are the written representation for, or what are the examples? You're going to get a written representation from the management admitting that all the FS has been prepared according to IFRS. Clear?
Mm-hmm.
Okay. You're going to get a written representation from the management that they are admitting they have provided everything, every relevant information to the auditor. So if something comes up, auditor would say, see, in the written representation, they have told that they have given us everything, right? Okay, so this is a
Mm-hmm.
must. Okay, and then another example is they're going to admit that all the transactions are actually being reflected in the FS. Clear? There could be specific matters also. There could be management judgment. So, for example, IAS 40 requires to revalue the assets on a regular basis, right? Okay. And if the client hasn't done that, where do we get the values from, right? So in that
Mm-hmm.
case, it is client's assumptions and judgments. So we are going to get the written representation about the same from the management. Clear? Okay.
Clear.
Then we are going to get the written representation on the provisions, liabilities, etc. Okay. And we are also going, if there is any product line which is going to continue or which is going to discontinue, we are going to get the written representation for that as well. Okay. Now, matters
Okay.
required by other ISA. So all the known and suspected frauds needs to be communicated to the auditor, and it is a must. Clear? So nothing
Mm-hmm.
should be hidden from the auditor. Okay. And if there is
Okay.
any non-compliance occurring in the client, it should also be communicated with the auditor. Okay.
Okay.
And the management should also be known about the uncorrected misstatements and its effect on the FS. Clear? Now,
Mm-hmm.
all the subsequent events should be communicated to the auditor. Okay. All going concern issues should be communicated with the auditor. Okay, and written representations are like a documentary evidence which is going to be directly obtained by the auditor. Clear? Okay,
Clear.
but the problem is evidence is not independent. Okay, so auditor is going to use his professional judgment and decide whether or not to rely upon the written representation. Clear?
Mm-hmm.
Okay, responsibilities towards going concern. So both the auditors and the those charged with governance are have some responsibility towards the GC. Clear? Okay.
Mm-hmm.
So the primary responsibility is always on the end of the client. That is the people who are charged with governance. Clear? So the
Clear.
BOD cannot expect that whatever happens in the company, it is auditor's responsibility to investigate or to pull those out, right? No, it doesn't happen like that. The first action should be taken by the BOD itself. Clear? So
Clear.
auditor, as an auditor, he only has a responsibility to review what has been actually found out. Clear?
Mm-hmm.
So, what is a director's responsibility? He's going to assess the company's ability to continue as a going concern. He's going to disclose if there is any problem with the company in continuing as a going concern. Okay, he is going to take into account all the relevant factors. Okay, that is the current and expected profitability in order to understand whether the company has going concern issue. Okay, he is going to review the company's ability to pay back the debts. Clear? And also he is going to review all the sources and potential sources of funds he could get in the future if the company is in a going concern. Clear?
Mm-hmm.
Okay, so what is an auditor's responsibility? The auditor is going to assess the FS which has been prepared on the going concern basis or not. Clear? So if the
Clear.
going concern basis is used, he's going to get all the sufficient appropriate audit evidence in order to ensure that. Clear? and the auditor is going to ensure the company is not a going concern or not, if there is any risk like that. Clear? Okay.
Okay.
And if the auditor has discovered any material uncertainty, he's going to check whether the company, the client, has actually disclosed it in the FS. Clear? If the
Clear.
company is not a going concern, he's going to review the financial statement in order to ensure that it has been prepared as per the liquidation basis. Clear?
Clear.
Understood?
Yes.
Yes.
Okay, guys. So that chapter is also over. Okay. So I
Okay.
need for Sarah, I need 2 days, 3 days maybe. For Samriddhi, you just need to sit on the last chapter only. That is reporting. Clear?
Okay, ma'am. Clear.
Okay. Sarah can go, Samriddhi stay.
Okay.
Okay.
All right.
Bye,
Thank you
Sarah.
so much.
Assalamualaikum.
Thank
Thank
you.
you.